Coming up today, a look at the meme stock mania and what it means for markets and where we could go next. More hot inflation prints, what could happen with tomorrow's CPI report, Powell no longer confident in his forecast, Home Depot sales fall, and the booming copper market. Hey, what's up guys? Welcome back to the Click Capital Daily Market Review. Thanks very much for tuning in with me today, and apologies I couldn't make it in yesterday. However, I was watching the market, and what an interesting start to the week with all this meme mania. Now got the S&P 500, now just within 20 points of all-time highs. And like I've been saying, I'm pretty sure we're going to at least break out to all-time highs, maybe have a little peak above there, maybe consolidate and pause, and that's looking more likely. Now on the back of Meme Mania, I actually have to change this chart to logarithmic to see what's going on here in GameStop. And so I've got a few observations of what all this means. And so Roaring Kitty, aka Keith Gill, the guy behind the original GameStop Meme Mania, stopped posting in June 2021. Then all of a sudden, out of the blue, came on 2 days ago and posted this meme here, and has just been posting a series of cryptic meme videos. No text, no writing. We don't even really know if it is actually Keith Gill or if his account's been hacked, as I believe this is an orchestrated pump. And we could see that last week with the price action ripping up here on this big candle. I was actually looking at a potential short around $18 a share. However, I didn't take the short on the count of this being a bull flag and big volume. Didn't look like a topping pattern to me. And luckily not, because it went into a short squeeze yesterday, as we all know. It just highlights the importance of why you must always have a stop when shorting and a small position size relative to your account, especially in these little crazy stocks like GameStop, because we are now into a big short squeeze. A lot of hedge funds are getting hurt, and just from the start of this month, we're already up over 350%. It's also spilled over into AMC, and a few others have been running as well, Reddit, and a little bit of a pop-up in Robinhood. So a few observations. A, just shows you what a clown market this is, makes a mockery of serious investing. There's been no new developments from the company. Their last earnings, they missed by 25% on both the top and bottom line. Sales are still lower year over year. Business has still got a lot of headwinds. And just going back to the craze of early 2021, split adjusted, it got up to $120 a share. So here we are, trading after hours about $53 a share. And because of the meme mania crowd, or the Reddit traders, pretty much helping to prop up these companies, keep them afloat, kick the can down the road, it's highly likely GameStop, AMC, going to do a secondary equity offering, sell more shares to the market, replenish their balance sheets, and keep the party going. Another thing it shows is just how easy liquidity conditions are. Ever since we heard Jay Powell and Janet Yellen came out on the 1st of this month, loosen financial conditions, increase liquidity, backstop the market, we've been nothing but up until the right. And of course that's spilled over now into GameStop and AMC. Keith Gill made a very well-timed post. However, like I said, what was all this volume and candles about? That to me looks like it's been orchestrated. Possibly with Keith Gill in tandem with some hedge funds. And because he's not actually mentioning GameStop or any text at all, he's just posting all these weird cryptic memes, he is fully legally covered. And he will not be able to be technically accused of pumping the stock, even though that has been pretty much the effect of all these memes. And like I said, just shows you what a clown market it is. As if this is all it takes to pump up a stock to 15 billion market cap. But nonetheless, it makes the stock market quite entertaining to at least observe and watch. And like I said, when stocks go crazy like this, even though they're bound to do a secondary and it's going to tumble over, who knows, it could shoot up to $100, $200 a share again. So I, for one, am not shorting this here, even though I was close to last week. But like I said, that wasn't really a topping pattern. It was a bull flag on heavy volume, and it was kind of suspicious to start with. And so that's just a sign of how easy liquidity conditions are, which means we're probably going to break out, especially today, as we got hot PPI, worse than expected. The market didn't really react negatively to that at all, which means we're trading on sentiment, animal spirits, all that good stuff. And funny enough, there's actually a bit of correlation between the price of GameStop stock and inflation expectations. Now, there is the old saying, correlation doesn't mean causation. However, I'd say there could be some causation here, because they both could be a symptom of loose financial conditions and excess liquidity in the system. And so not only did Jay Powell and Janet Yellen talk down bond yields, Biden administration's done a good job at bringing down the price of oil as well. Option dealers have priced that in with a huge VIX crush. Kind of the last shoe to drop was market breadth, and we've just got some really good signs of late, with the NYSE advanced decline line hitting new all-time highs just on Friday afternoon. And typically that bodes well for stock prices going forward. And we can see that with the percentage of stocks above the 50-day average now at 61%, and new highs easily outpacing new lows. There's a volatility index at 13.4 and volatility risk premium did get a bit of a bump there on Monday. That's a combination of a few things. The VIX weekend effect. The VIX will often crush on Friday going in the weekend. We can get a bit of a pop on Monday. I'd say that's exacerbated by the meme crowd and option dealers really having to bump up their IVs now that this market's going to get a little bit more volatile with what's going on in the meme space. And of course, there's been a pile-on into call options. We can see that in the put-call ratio at a really low 0.69. And of course, that's showing up in the option volume leaderboard. GameStop coming in number 4 today. $662 million worth of call options versus 153 puts. Got AMC in there as well. And overall, reasonably busy day in the options market. 40.6 million contracts traded and a whopping 61% of them calls. And there's a look at the stock price leaderboard there today. GameStop coming in number 2. Also got SunPower, AMC, Plug Power, Reddit, Robinhood, and a few other smaller stocks as well getting some action there. And so the market's on a roll. The chart of the S&P 500 streaks without a 2% daily move. Now over 300 days. Something we haven't seen since the really quiet, low volatility year of 2017. And the market didn't even seem to care. That PPI, producer prices, rose a lot more than expected last month, coming in 0.5%, a bit hotter than the 0.3% economists had been expecting. And that was probably helped out by the revision of PPIs in March, in which they revised it to a 0.1% decline versus a small increase that had been previously reported. And that was enough to keep a lid on treasury yields today. See the 2-year there at 4.82 and the 10-year at 4.44, with high yield bonds still holding up as well. And now we've got TLT treasuries sitting above the 50-day as well. But tomorrow is the biggest print of the month. Consumer Price Index, CPI, headline inflation data. JP Morgan's laid out 6 scenarios. Economists are expecting core CPI will show a 0.3% increase in April, slightly below the March reading of 0.4. JP Morgan says if it comes in above 0.4, S&P could sell off up to 2.5%, between 0.35 and 0.4, up to 1.25% decline. So on and so forth, right down to below 0.2%. They expect the S&P could add on up to 2.5% gain. And so even though some saying tomorrow could take on outsized importance in the financial markets after we've had a few months of mildly upsetting inflation setbacks, just looking at this stock market now, the breadth, the momentum, the backstop from the Fed and the Treasury that's spilled over now into Meme Mania, and it's really hard to tell. Even if we get a hot print, will the market react negatively? Maybe it will sell off really hard, and then there'll be a strong buy the dip, and then we end up finishing higher. I wouldn't be surprised if that happens either. Or if it comes in line, we could still get a really strong rip right off the bat. Either way, it should play a role, and will give us a look at really if the market still cares so much about inflation, or whether liquidity and sentiment has just taken over here. We also get to look at NVDA earnings next Wednesday, the last mega cap tech to report. And one would have thought Powell's comments today, pretty much saying he's not even confident in his own inflation forecast. Could be in the midst of another pivot in his language right here, hedging his own bets. Maybe he's already had a heads up on CPI. Market didn't seem to care about that either. Saw that with bond yields holding steady and the stock market rising. With him going on to say, my confidence in that forecast is not as high as it was, having seen the readings in the first 3 months of the year. We're just going to have to see where the inflation data fall out. Even acknowledging there's a small chance the Fed might have to raise interest rates again. But finally finishing, it's more likely we'll be in a place where we hold the policy rate where it is. However, we've still got Fed Fund futures pricing in a cut in September, about a 2/3 chance at that, and another cut come December. And global fund managers, guys who do this stuff all day, say global fiscal policy is too stimulative, more than any other time in history. And here we are talking about rate cuts. Not only that, we've got strong tailwinds in inflation. The huge amount of electricity AI users and their data centers are showing electricity inflation is the highest in 40 years. 3-year annualized change now over 8%. And the forecast is that the change in average US power consumption growth rates is going to exceed that of GDP for the first time in 3 decades. Not only that, we've also got the widest disparity between the valuation of the US equity market relative to the rest of the world as measured by market cap to GDP, with America now back to approaching 200%. And this comes at a time when a lot of consumers are struggling. Just like we saw in that consumer sentiment survey last week, taking a bit of a nosedive. Like I mentioned to you guys, a few retailers I was eyeing off, like Starbucks, Gap, and Best Buy going into retail sales report tomorrow that we'll also get. We just heard from Home Depot. They missed expectations, and first quarter revenue actually down 2.3% from the same period a year earlier. And same store sales in the US dropped 3.2%. And there's a stock market's reaction Gap down, was a bit of a buy the dip. However, ever since we got that sentiment survey, we've had a little bit of a pullback in these retailers, and we'll see what happens tomorrow in reaction to the retail sales report. Helping the picture for inflation, and by extension the stock market, is the pullback in oil, ending at a 9-week low after OPEC leaves demand forecast unchanged. And there's a look at crude oil. Consolidating around $78 a barrel, really testing the support here, and gold just hanging in there just above its 50-day. In addition to wheat and corn, what else has been waking up lately is that of copper, which is definitely really important now going forward as it's used in electric vehicles and data centers, and has also been the center of a takeover bid by Australia's largest mining company, BHP, and their $43 billion takeover bid for Anglo American, which they rejected, and BHP has made it clear they're looking for that company's copper assets. Instead, Anglo came out and announced its own turnaround plan and said they're going to spin off their platinum, diamond and steel making coal businesses and focus more on copper. And I'd say the West and China are in for a bit of a fight over global copper assets, as it really is the metal of the future, along with other important commodities like lithium, uranium. And there's a look at copper futures on a strong rip today, getting up to 490, starting to go parabolic here and a really strong uptrend. There's wheat still walking the line, and while we've had a bit of a correction and pullback after the really hot cocoa trade from the start of this year, we've also got others now like orange juice starting to rip up on big volume as well. Like I said, there's some big moves being made in this market on volume, momentum showing up all over the place. There's China breaking out yesterday to new highs for the year, still on a really good rip. Even though we had a bit of a pullback in Barber today after they missed earnings so slightly, that trend in this market of punishing any companies missing on numbers seems to be continuing. That's the only really kind of bearish thing going on in this market. Other than that, we're having good rips all over the place. We can see that in Tiger Brokers. Already up over 20% since I mentioned it to you guys a couple of weeks ago, and it too ripping up on really strong volume here. Really good price action. Same deal with clean energy, which looks to have possibly found that bottom down there in mid-April, also breaking out to multi-week highs today. And there's a look at the economic calendar today. PPI coming in hotter than expected. Get some Eurozone GDP data tomorrow. And then the big one from the States. Inflation rate year over year expected to increase 3.4%, month over month 0.4%. And we'll also be looking at retail sales expected to have grown 3.8% year over year, month over month 0.4%. It'll be interesting to see if retail sales follows that of the consumer sentiment survey, which came in really weak last week. Corporate Insight is starting to trade again, just doing a little bit more selling than buying. It's not really that unusual. It's pulled back in the bond yields. It's pulled back the dollar as well, which is supportive of the stock market. Surprisingly though, this meme stock rally hasn't spilled over into Bitcoin, which is pretty much the biggest liquidity proxy there is. So that's a little strange. And it's not just the States about to break out to all-time highs. We've also got some good global equity breadth. We can see that in the UK FTSE and European stocks like the German DAX sitting up there at highs. Have a bit more consolidation for Japan's Nikkei and the LZ 200. There's that copper versus gold spread breaking out, which typically correlates with global economic growth. And the other kind of strange thing about this market is it's been led by defensives. There's utilities still walking the line higher, consumer staples sitting up there and doing a bit better than consumer discretionary, and semis maybe starting to perk up a bit here again, maybe coming back to test these highs. And we can see that on NVDA doing a little bit of a bull flag, but on really weak volume, so just potentially consolidating here. Like I said, we'll get to hear from earnings next Wednesday, and that could be another pivotal point for the market. There's cannabis bouncing back from that support zone, now sitting just above its 50-day VWAP. Trump Media still consolidating above its 50-day. And like I said, that Meme Mania is spilling over to other really small stocks. There's Tupperware Brands, still a 100 million market cap company, more than doubling over the last couple of weeks. Big pop up there for Virgin Galactic, space tourism company. And there's the latest look at GameStop, still trading up about 10% after hours, around $53 a share. And like I said, it's anybody's guess. This thing's bound to fall over again. However, we could easily see $100 a share before that happens. Some more volatility for AMARC, up 7% today, back and forth there. And large financials, still trading really well here. Obviously liking these lower bond yields, with JP Morgan ripping up to new all-time highs. Alright guys, there we have it for this Tuesday. Interesting times indeed in this market. Meme stock mania, animal spirits are back, liquidity conditions are loose, volatility on the floor, bond yields and oil pulling back. Market didn't seem to really care. The hot PPI today, or Joe Powell saying that he's no longer confident in his inflation forecast, even saying there's a small chance we may hike. The market came off hard on that. That would be no surprise. However, got to always pay attention to the price action. Technicals lead, fundamentals follow, and we look primed to break out here. So it's going to be interesting to see the market's reaction to the CPI tomorrow. That's going to give us a look at what this market's really trading on, and maybe it does a bit of a continuation bet on today's green candle and kind of ignoring the data and just trading on its own accord. Either way, it's a tough market to put any shorts on, and that's why I prefer hedging through a VIX bullish call spread. So thanks very much for tuning in and hitting that like button, and I hope to see you again here tomorrow for the market's reaction to CPI, and I'll break it all down for you again. Cheers, guys.